pardon the interruption, the new debut panel strategy for this conference, where we're going to have a rapid-fire discussion between two brilliant and knowledgeable guys in the space, and none other than David Sargeant from iGaming Ideas will be moderating this panel.
We're going to do a pardon the interruption style quick fire session. So if either of you mention regulation, you can leave. So this is welcome to episode 1 of Pardon the Disruption, we're calling it, on investment. So it's supposed to be a quick fire session. We're reliant on the wit and intelligence of you guys. So wish us luck, everybody. I'm David Sargeant. I'm a sports betting consultant. I spend most of my time doing market access deals, helping teams with sports partnerships with betting companies. But it's not about me, it's about these two guys, so I'm going to stop talking. We've got Joel here, and I'm going to read this off, but Head of Gaming Investment Banking at Houlihan Lokey.
Got it.
More importantly, 6-time marathon finisher, avid skier, dedicated yogi, so we have a bit of a Zen session, and a proud dad, which is lovely. Adam, Senior Advisor to Blackstone, Gaming and Leisure, recovering Goldman Sachs. Have you got over that? Maybe. Part-time philosophy professor, self-described seeker of truth and beauty. So I must be the beauty here. That's good.
Who wrote that?
So anyway, so rather than me keeping you all from lunch, let's get cracking. I think
you're the guy that actually ruined the economics of the U.S. market by creating all these crazy market access deals.
Excellent.
Jesus, let's attack this guy.
Feisty already.
Excellent.
That was unscripted.
Yeah, totally.
It's all good. So, straight into it. We saw a pretty tumultuous 2022. 2023 feels very different. I feel definitely there's been a shift. Is this a good time to invest in gaming stock? Are you going to make me all my money this year?
I'm a recovering sell-side equity research analyst and also hedge fund portfolio manager, so I've worn a lot of hats. I'm going to take the bear case, Adam. I'm going to say, you know what, the stocks have rallied a ton off the bottom like every other risk asset class. It's, March, 8th or 9th. The easy money has been made. I think it's time to take your chips off the table and batten the hatches.
Well, I would give a more nuanced answer. I think it's always a good time to be investing in stocks. I mean, by definition, stocks are a liquid category. So every day, Mr. Market is offering you a price, and you can decide if you want it or not. And thematically, the gaming industry, and that means a lot of things, but more broadly, the gaming industry has a lot of money to be made and a lot of growth ahead of it. So creating new exposure is a different question from having exposure and how you manage your exposure. So that's why I like the idea of attaching yourself to stories you like. If they seem expensive at the moment, start light and leg in as the prices become more attractive. But my favorite positions are one where I will always have exposure to certain companies. And there are times when I'm lightening up, when the market is offering me a good deal. And there are times when I add when I feel like I'm getting a better deal.
Is he right, Joel?
I think it's a good long-term investment strategy. I'm sort of taking the view that if you're a short-term trader, and a lot of these names, particularly in the space, because we're talking about mostly small and micro-cap investments, these are generally the domain of the hedge funds. These folks are not necessarily buy and hold. I think there's definitely buy and hold names in this space. I think there's some attractive value right now, but I also think a lot of risk assets have inflated off the bottom. If you pulled up the stock chart for DraftKings or kind of go down the list, it's probably highly correlated to every other crypto risk asset class name out there, broken SPACs, et cetera. But it is definitely an interesting time to sift through the rubble right now, and I'm sure we'll get into that because there are businesses that are going to endure, that have competitive moats that are attractive. I personally own one stock in this space. I'm actually allowed to invest, which is kind of cool. At Houlihan Lokey, I did buy Genius on my garden leave around $250. So I'll talk my book up a little bit on that one. But I look at that, I'm like, listen, that's a real competitive moat. Data is important. It's paramount to this business. There's really only a handful of players in this space. So my first job in my career was at Moody's, which I really look at that with the same lens, where you've got a duopolistic, oligopolistic business. That's a great place you want to invest.
I appreciate the point about trading versus investing. I consider myself an investor, not a trader. But even in a world where valuations still seem high on a lot of long-dated back-end growth businesses, the gaming industry includes certain asset-heavy businesses that pay really good cash flow, that are under-levered, that are compelling stories. I don't like naming specific stock names, but there are a couple of gaming REITs that have very compelling yields relative to any benchmark you choose. Even as benchmark rates have gone up on a risk-adjusted basis, I think those are very attractive stories. And so they're expensive relative to what they were, but the yield return and the predictability of those cash flows and the safety of the dividends make them still attractive to me. I'd be doing less now than I was doing a year ago, but those are the kinds of things I like having in my portfolio.
So later on, you can tell us your Wall Street Bets username, and then we can see the specifics.
There's only two. It's not that hard to figure out. And actually, I like the strategy of owning both of them, and you could play them off of each other. And if one becomes more attractive on a yield basis, pound for pound, you add to that position, and vice versa.
You've got to stop talking because we're on to the next topic.
Oh, sorry.
B2B, V2C.
You need a buzzard.
So B2B, B2C. It's interesting you said about Genius. Where are you investing? What's attractive? What's not?
I mean, listen, every company's got a bit of a different story. I think it really depends on the enterprise. Or you look like an Evolution. Todd House, who I've known for probably 20 years, was speaking on a panel earlier. That's a fantastic business, Evolution, right? They generate a ton of cash. They've got huge market share. You would have to look at them as a B2B operator or provider and say, are they going to be the dominant player forever? Is there some sort of upstart that's going to shake up the marketplace? It's not publicly traded, but like GeoComply, who I think Blackstone is a big investor in, right? They've got, let's just call it a dominant position in the marketplace. Are there other, venture capital-backed companies out there trying to take their market share, right? So B2B, I think, is very interesting, but I think you've got to pick your spots. And then I would even say B2C, right? I mean, you've got a Rush Street that's kind of been beaten up, right? They have made some nice inroads in a number of markets. They've got this international angle in Colombia and some other kind of regulating markets, which is interesting, But I think you have to really be careful as you're legging into these names.
So there are pitfalls with both strategies. The B2C business can be more volatile, more capital intensive, harder to scale. The B2B parts of the business, and I'm generalizing here, so I'll get this widely wrong, is more of a toll-taking business. And as the industry grows, if you are a B2B supplier, you will take your piece. And so I think GeoComply is a great example of that. I would also say that they're not mutually exclusive. I'm an investor in a company called Gameplay Network, so I'll plug that one because it's a private company. And they began with a B2C strategy on the B-Spot app, offering online gaming powered by horse race wagering that drives the outcome. So it's a reveal technology of something that is legal in many states, but displayed in an entertaining way that mimics traditional online gambling. And as was said earlier, there are only 6 states with legal online gambling, but there are something like 40 states where horse race wagering is legal. Not all of those states see clearly a path to this product, but most of them do. So they began as a B2C company, and they're transitioning now to have a B2B product, not complete transition. It's not an on-off switch, but the success of the B2C product lends itself to B2B applications with partners who are in jurisdictions that don't otherwise have access.
Is it just because it's too expensive to be B2C? So you can make money B2B? Is that safer?
Yeah, as I said before, I think scaling a B2C business is very expensive, especially when irrationality seems to be awash in the industry with acquiring customers and free play and bonusing and marketing spend. So yes, it's a more expensive strategy on a unit economics basis. But again, with the right war chest of capital, if you scale a B2C business, you could make a lot more money. It's a more vulnerable business, but those are the differences as I see.
Okay, there we go. Let's move on. It's so sexy.
Right.
So final end game we're going to talk about exactly on that B2C, because we're seeing a lot of unprofitable businesses. So what is the end game for these kind of tier 1, tier 2 operators? Where are they going? How are they going to survive?
Yeah.
What happens?
Listen, I personally don't think the game is over. I think, there's obviously a lot of chatter around, call it the 2 or 3, largest market share players. I think, listen, they've got to continue to innovate. They've got to keep their game up. I think there's plenty of emerging upstarts out there who have some capital, have differentiated technology that will find their lane. The question is, they've got to keep their costs down to some degree. They've got to start to hit critical mass. I think you've got other players, whether it's Underdog pivoting to OSB. You've got PrizePicks as a substantial business, right? There are other folks that are not necessarily the headline, Flutter, MGM, Caesars, FanDuel, Fanatics. There's other people waiting in the wings, and I think they're really innovating and sort of moving the needle. So I don't think the game is over. We're still very, very early innings here, at least on the sports side.
I love that you keep going first, because then I could riff off of what you said.
Let's do it.
As it relates to the digital parts of omni-channel businesses, I think the end game is separation of those businesses. I think the sign of a successful silo for any company is that business can stand on its own with its own management team, with its own capital structure. Often they require different capital structure, different investors anyway. And, like Joel, I've been around the industry a long time. I spent 17 years at Goldman Sachs, 7 years at Fortress as an investor, and now 2 years in this new seat at Blackstone as a senior advisor. And the experience of the gaming technology business from like 2010 to 2014, right around the time I was leaving Goldman Sachs, there was a massive consolidation wave among the traditional gaming tech players. These are slot manufacturers and lottery providers. There was really no internet gaming business to speak of, no legal sports betting, no fantasy, really, no sweepstakes. These businesses didn't really exist yet.
Don't say regulation.
And what we've seen after that wave of consolidation is a deconsolidation wave. And Cygames, now Light and Wonder, which I still have to get used to saying, is a good example of that, of creating value by separating businesses. IGT bought Double Down and then sold it, right? And so I think the sign of being closer to the end game is when there's a real balkanization of these businesses and they're standalone. I think that's a long way off, and I think we're more in the omni-channel phase of the industry where land-based players are figuring out their digital strategy, and the digital strategies themselves have lots of different pathways to market. And as that shakes out, I think we'll see more separation of these businesses.
Yeah, that's interesting. I thought there was an analyst comment about how Barstool as a brand had increased in value. So actually just as an investment, that was quite interesting for Penn, even if it hasn't quite worked. But
yeah.
We're out of time. We've got to keep going. Adam, tell me what technologies excite you? Where would you put your money? Is it all AI? Is it cashless? Where is it?
Technologies that produce cash flow excite me.
Yeah.
But among those that produce cash flow, I have been spending a lot of time on the payments space. I think our industry is unique in being woefully late to figuring out how to make paying easy for our industry. It has something to do with regulatory matters. It has something to do with the technology itself. But walking around the G2E floor, it struck me how many different companies were involved in the payments ecosystem. And they all attach at different places, and some do a few things and some do one thing. But we haven't yet figured out how to do that right. Not just cashless, although I think that'll be a big part of it, but just payments in general. So that excites me. I think there's a lot of change coming there, and therefore a lot of ways to activate capital. And it was mentioned earlier on one of the panels, and I agree with it. The traditional lottery business is still early in its transformation of making product available online, making it interactive, making it engaging, and making it entertaining. So I like the lottery space, and there are a few different ways to do that, and lots of companies trying to do it. And so I like that as well. And then I'd say categorically the toll takers, and Joel mentioned GeoComply, I consider them one of them. No matter who wins on the operator side, they win because they get a piece of the transaction. Not 100%, but a very high percentage of those transactions. So I like to find those businesses that take a piece of transactions across different B2B partners.
Yeah, listen, there's so much innovation and exciting things going on in this space. That's one of the best aspects of my job is meeting entrepreneurs and really helping them kind of frame how they want to go out to market to raise capital, finding, partnerships. There's so much interesting stuff going on. I personally look at probably as many companies as Adam does, but I'm pretty fascinated by sort of this Twitterification of sports betting. I've spent a lot of time with some smaller platforms, whether it's Picket or Juice Reel or Better Off. These folks where they are becoming the hub, and it's early days. I think they're all trying to figure out a monetization path. But when I'm gambling on sports in New Jersey, I'm going to these apps before I go to place a bet. I want to see what other folks are talking about. I want to get a sense of where the community's at. Look at where the money's actually being wagered, and really make an informed decision off of that. So I think there's a role for these businesses where they are really the central home where you go to first. And I also think these types of businesses probably become, more mainstream targets for traditional media over time. So early days there, but there's definitely a community rising up around betting right now in the U.S.
Perfect.
Perfect timing. You didn't mention AI, which is the thing that excites me the most, but we're out of time, so who cares? Models. Operators changing right now. They're all slashing costs, cutting bonuses, telling us that they're all going to be brilliant iGaming operators. What wins out? What do they do? How do they make money?
Figuring out how to create sustainability and not just revenue growth for the sake of feeding market share and taking a piece of the pie of the TAM. That's important, but demonstrating how that repeats and is sustainable and is recurring is going to be critical. And the flip side of that is the cost of getting there, right? We have this massive mismatch between CAC and LTV. It's starting to rationalize, at least that's my observation on the latest wave of earnings calls and analysts' beatdowns on, forcing a path to profitability. And so that will continue to rationalize and normalize, but I think it's critical to show that the customer you're creating is a sustainable one and a source of recurring revenue.
Yeah, I mean, I know we're supposed to disagree, but I largely agree with Adam on that. It's really about, customer retention, getting your CACs down. Again, as I live in New Jersey, I've got every sports book on my phone. I'm personally, maybe I'm a little bit more advanced than the average consumer. I look at the exchange betting marketplace, and I just don't see how that doesn't become a significant market over time, just as you experience with Betfair. It's just a much better value proposition for the consumer.
Okay, good. Let's go. One-liners, I think we're on. So you're only allowed to say very little. That might be tricky, Adam.
One very long line.
Yeah. Where are you going to put your VC dollars if you're that model?
Companies that will produce a good return for me.
So I wish I had a buzzer. That's not an answer. Do it again.
I'm looking at a lot of sports tech.
Okay.
So not necessarily gambling or gambling adjacent, but
That's it.
things
Online.
like that.
Joel?
Sorry.
I'm going to say talk to the venture capital investors and try to get in their funds. That's the best path that you can do. I mean, let the professionals who are looking at hundreds of companies evaluate the wheat from the chaff.
Pass the buck. You can give me all your money. That's fine. We've kind of said this, but picks and shovels or operators?
Picks and shovels.
Picks and shovels.
Is there room in the market for new entrants for sports betting market?
Absolutely.
Yeah?
Yes.
Oof, we should have got into that, shouldn't we? A tribal operator is going to make an impact?
Yes.
Yes.
Oh, God, this is another panel. isn't it?
Lots. I mean, can I add more than one line?
Yeah,
Or
go on.
lots of cash flow.
Yeah,
Big balance sheets.
compete. They're going to compete.
Yes.
How?
Well,
Lots of balance sheet
Yeah.
resources.
there was also some noise now, I forgot which regulator was, the NIGC, I think, about redefining the scope of
Yeah.
where games are
Glasgow.
offered and where they can be offered. If that gets any legs, that's a massive seismic shift in what tribal operators can do. I don't know that it'll get all the way there, but just the fact that that's being debated now, I think, is a very good sign that tribes are winning this battle to gain more space and share.
Good, like it. How many national sports betting brands can the market sustain? National.
I think it's the wrong question. It's not about brand to me. A brand gets made. You don't start with a brand and create something. The brand has value because of the product and because of the success that it has. So I don't think there's a limit. I mean, my guess is it's going to be less than 10. But I think you'll have a small number of very dominant players and a large number of smaller players. And those that have sustainability can survive for a very long time as a small part of the market. So,
Okay, Joel?
Yeah, same thing. I think there's probably a little bit less than 10, but I feel like there's those, again, back to the underdog prize picks conversation. There are folks with lots of customers that could pivot. So there could be regional brands, there could be brands, on the upstart front, but it really comes down to product, innovation, user experience,
Didn't
customer
answer the
service.
question, but I'm going
Sorry.
to let you off. I invest in a bunch of startups too. So I just want you to both give me one piece of advice for new B2B entrants. Your B2B, what are you doing? How are you scaling?
Just ask the really difficult questions. What is your monetization path? How are you going to be different?
I'll give you a piece of advice. I like the sentiment of investing in people and not concepts, because there are often lots of companies doing the same thing, and some survive and some don't. And I have never done a scientific study on this, but as often as not, it's because of the drive and motivation and tenacity of the individuals leading the organization. And so, in a post-COVID world where we're starting to spend more time in the presence of human beings again, I think that's a good thing, because getting to know the people that you're investing with and partnering with is critical. Not just how they conduct themselves when they're doing business, but what are they like in life, and how do they handle difficulty? And I know this is longer than I'm supposed to go on, but I've done a lot of interviewing in my life, and I love the question of tell me about a failure, because I think the best leaders are people who have had real failures. If you've never had a failure, there's reasons for that, right? Either you're not telling us about it, or you haven't really tried something hard, and that tells me something about you too. So I think those are important qualities in individuals.
Perfect. And I think that's a great end, because when people ask me, tell me about a failure, I hope they don't say this panel. So that was part in the disruption. Thank you very much. Thanks, John. Thanks, Adam.
Appreciate it. Good work, man.
Nice.